Hello everyone, welcome to our channel The Commerce Catalyst. Today we are going to continue depreciation, depreciation. So now to solve the problem. So in this the question is the Samir and brothers purchased a machine on 1st October 2021 at a cost of rupees 1,40,000 and spent 10,000 on its installation. The firm retained off depreciation at the rate of 10% per annum of the original cost every year. So the books are closed on 31st March every year. So the machinery account and depreciation account for 3 years. In these questions, first you have to understand how to calculate depreciation. So there are two methods of depreciation. First one is the straight line method. Straight line method. It is also known as original cost method. Original cost method. Original cost method. Straight line method and original cost method. Fixed installment method. It is also known as fixed installment method. Or either written in questions straight line method or original cost method or fixed installment method. Things is the same. ये एक ही बात है. Either written in the question straight line method or original cost method or fixed installment method. In this question, return the original cost. Generally, in depreciation, is the two kinds of method. The first one is the straight line method, and second one is the WDV method. WDV method means retain down value method. Retain down value method. Retain down value method. WDV method. Retain down value method. It is also known as diminishing balance method. It is also known as diminishing balance method. Diminishing balance method. Balance method. Retained on value method. It means WDV. WDV method. So what is the difference between straight line method and retained on value method? So now in this chapter there are two things remember always. Number one is the method, in which method, and another one is the date. So date means date, and number two is the method. So these are key for solving depreciation. Depreciation. If you understand the date, in which date and method, then your problem it will be resolved. Come to the point, the questions. So what is the question? Question is the Samir and brothers purchased a machine. That's the first one. The in the ledger account. This is a format of ledger account. This is a format of ledger account. Right one. This one the date, particulars, particulars, date, particulars, amount, rupees, credit, debit, amount, rupees. In this question, Samir and brothers purchased machine on 1st October 2021 at cost of rupees 1,40,000 and spent 10,000 on its installation. The firm write off depreciation at 10% per annum of the original cost every year. So the books are closed on 31st March every year. So machinery account depreciation account for 3 years. So in this one the machinery account and depreciation account. So first one is the machinery account. Machinery. Purchase. What purchase? Machinery. When? 1st October. 1st October 21. I already told you in this question, in this chapter, you have a two key points. First one is that the date, and another one is the methods. So in this questions, method used, in which method used? Method used the original cost method, and it is also known as straight line method and fixed installment method, whatever is written in the questions. So in these questions written in the original cost every year, so we have used the original cost method here. So first you understand the date. So date is the October. Okay, and another is right, the closing is the 31st March every year. This means 31st March. It means this is the this is the 1st April to 31st March, but purchase on 1st October. So in the first year, you have charged the depreciation for 6 months only. How? Write down machinery account debit to bank account. First write down machinery account debit to bank account. Bank account. How much? 1,40,000. 1,40,000. And installation charge, how much? 10,000. So you spend to bank account. How much? 10,000. It means 1,50,000. When books are closed, 31st March every year. So write down here is 31st March when 2022. So in this year we have charged the only 6 months depreciation. So how to calculate depreciation? Equal to 1,50,000 Percentage is 10% into 6 by 12. Have you any problem? No problem. So depreciation how? 1,50,000. It means original cost 1,40,000 plus 10. 1,50,000. Rate is given in the questions 10 by 100. And 6 months how? Because the purchase machinery purchase on 1st October. So 1st October to 31st March, 6 months. So now it means 7,500. So 7,500 depreciation. So right here is depreciation. 500. Now right here 1,50,000 by balance CD. Carry on. Now right here is to balance DD. Brought down. How much? 1,42,500. So date is here 1st April 2022. And now 1,42,500 and also 1,42,500, 31st March 23 by depreciation account. How much? 15,000. Why 15,000? Because in this year we used whole year because 1st April 23. So because of this is the original cost method, so we charge in another year the 1,50,000 into 10 by 100 into whole year, so 1 by 2. So it means 15,000. 15,000. It means 1,42,500 minus 15,000. So 0 0. 1,27,500. 1,27,500. Now this is the buy balance CD. by balance CB 31st March 23, 31st March 22. Now the next one, 1st April 24. To balance BD, how much? 1,424. To balance BD, 1,27,500. Again, 31st March 25. So you write the by depreciation, how much? 15,000. Why? Because used straight line method, original cost method, fixed installment. So now the closing, because third year is closing. So 1,27,500 and here is 1,27,500. Now the 1,27,500 minus 15,000. 5.5 to 1,12,500. So this is the machinery account. Now we write the depreciation account. So I'll go over here. Another ledger account. Date, particulars, date, particulars, amount, rupees, amount, rupees, amount, rupees, credit, debit, credit, depreciation account. So depreciation account debit to machinery account, to machinery account, how much? 7,500 by PL account. 7,500. This is the 31st March 20. Another is the depreciation account debit to machinery account. How much? 15,000. by PL account 15,000. Date is the 31st March 23. 31st March, October 21, 22, 23. First one is the 22, 23, 23, 23, and 23 to 24, 25. Sure. Okay. So the 22, 23, 22, 23, and 23, 24. Okay. So to measure 15,000, 15,000, and and now the 31st March 2024. So two machinery account 15,000 by PL account 15. So these are the depreciation. This is the depreciation account. These are the PL account. So this is the machinery account and depreciation account in these questions. Again, in depreciation chapter, we kept in two key in mind. First one is the date. Date is here, and second one is the method. Generally, there are two methods to follow in presently in this syllabus. Number one is the straight line method, that is also known as original cost method or fixed installment method, and another one is that the WDV method, it means retained on value method or diminishing balance method. So in this date, why is date is required? Because we mentioned 6 months only here. Why? Because we purchased the machinery October 1st October 2021. So in this period, the 1st October 21 to 31st March 2022, used only 6 months this machinery. So we have charged the depreciation only for 6 months in this period, and after that we use the whole year, the in 23 and 24. So we have charged the depreciation for whole year because of a straight line method. So value is the same, the 15,000, 15,000 here. If the depreciation charge method is different in the things, if written down value method or diminishing balance method, whatever is read in questions, so we treat like that. But in this question, only use a straight line method. Why? Because the questions asked original cost every year. So thank you for